Hey guys, and welcome back to Alex Invests. As we can see, the markets opened higher this morning. They are coming down a bit, and NIO, although starting off the day a little higher, is now coming down a little bit, and it's now actually negative for the day. And that's what I want to talk to you guys about today. I want to talk about NIO and a little bit of Tesla as well, and the Citron report that came out on NIO with a very bearish price target, and whether or not there's some founded information in there or not. Before we get into it here, I just want to say please like and comment, subscribe if you like the videos. I'm also wondering, and you guys can leave a comment about this, whether or not you guys think I should have an intro video or just this little segment where I open with here, letting you guys know what we're going to do, because I also find that intro videos, they take up the time, and then you're really just watching something you would be watching every day anyways, and it's just like a couple seconds really of a waste of time. So anyways, let me know in the comments, and without further ado, let's get into it here. All right, so NIO is reporting earnings on Tuesday, November 17th, but they're reporting it at 7 p.m. So the next day of trading, we'll see the effects of that. What do I think for it? It really depends on where the stock goes now in the next day, really today. And it's down a little bit, which is actually good to see for earnings, because a lot of the time people will buy the earnings news and actually sell the earnings. But I have a feeling, because NIO has already been doing so strong, and I talked about this in my other video, how they've been reaching new highs on vehicle sales, and they're really the second in China, right behind Tesla. So I do think the earnings are going to be good, and I do think that it's going to be positive news for the stock and make it go up a little bit. But I am going to talk about that a little bit later when we actually get into the NIO stock chart for today. So stay tuned for that. For now, I just want to go through the Citron report first and sort of demonstrate some of the unfounded information that I found in that report. So let's just go through that together right now. All right, so here we are looking at the Citron report, and for those of you who don't know who Citron Research is, they're basically a famous short seller and research firm that looks at different companies. As we can see here, their price target is very bearish at $25, so they do not see this company being worth close to what the valuation is currently at. But let's look at some of the reasonings behind that. So they list two main points here. Their first one is the Tesla Model Y China pricing. So they say that Tesla's Model Y that's going to be built in China is going to be similar to the price of the NIO ES6, but there's a couple things wrong with this. So yes, the Model Y is going to start at about 488,000 yen, which is approximately $73,000 right here, as they say. But currently, the Model Y is still in pre-sale. You know, they haven't actually delivered any of these cars, and they're still working on the delivery of these cars. So I don't really see too much there. If we look at some of the different prices of the different cars, so we'll take two NIO cars and two Tesla cars. So the ES8 right now is 468,000 yen, which is about $66,000. The ES6 is about 358,000 yen, which is equal to about $50,500. The Model X, now this is the most expensive one that's actually sold in China right now, is 809,900 yen, which is approximately $114,000. So that's almost double the ES8. And if we look at the Model Y, and this is the one that's currently in pre-sale, it is going to sell for, like they say in the report, 488,000 yen, or approximately $73,000. And yeah, sure, they're going to be a direct competitor to NIO, and they should be, because the more competition is better for everyone. They say down here that if Tesla passes its cost savings on to customers, if this happens, then they would be looking at a price of 275,000 yen, which is approximately $41,000. But this is nowhere near to happening right now. This is probably 3 to 5 years down the road as well. And sure, Tesla is still going to be the leader, and I agree, Tesla will be definitely the leader in China and across the world. But NIO is still going to have plenty of cars to sell, especially they say it's in direct competition to NIO. And in a way it is, but in a way it's also not. There's a lot of things that NIO is doing better right now than Tesla. For example, their new 100 kilowatt hour battery that they announced on the 6th of November, that is, as a base, better than what Tesla offers as their base at 80 kilowatt hour battery. So right there already we can see that NIO has an upper hand there, and if their cars are just being sold at similar prices, that's still good for NIO because they offer things that Tesla doesn't offer. Another thing is their battery as a service option, where you don't have to actually buy the battery. You can just go and get it switched out to a different battery, and then you pay a monthly fee for that, which is not only going to decrease the cost of the NIO cars, but it's also something that I think a lot of people are going to want to do regardless of whether they have the extra money to pay for the battery or not, because it's just an efficient way of doing things, just switching out the battery and you've got a full charge again and ready to go, right? So there are these things that still differentiate the two companies, and I don't think that Tesla being priced similar, sure, it might hurt NIO a little bit, but if anything, it's just good competition for the two of them, and they're both going to grow together. One's not going to grow and the other one's going to be left behind. No, it doesn't happen like that. When you have a few leaders in the industry, they go up together, especially when you're in such a new and emerging market, which is becoming greater and greater. Like I mentioned in my other video, China wants to have 20 to 25% of their new car sales in China be EVs by 2025. And this number is just going to increase as time goes on. And as it does, more EVs are going to be sold, whether it's from Tesla EVs or NIO EVs or XPEV EVs or any of the other ones. They're all going to grow together as the market share that they have to sell these cars is going to go up. So I don't really agree with what Citron's saying here, you know. Sure, they got the price of the Model Y right, and sure, it's going to be similar pricing to NIO, but NIO is still going to be slightly lower pricing, and they both have differentiating factors. They both have a really strong brand, and a lot of China actually likes the NIO cars over the Tesla cars, according to some of the surveys they've done over there. So all in all, this increase in competition by the Tesla lowering the prices of their Model Y is really just going to be good for both of them. Moving on to the next thing here, according to this report, the next 12 months of EV sales, NIO is trading at 17 to 18 times that, whereas Tesla is only trading at 9 times that. Now, sure, in that respect, maybe they do have a pretty high valuation, but you got to remember that NIO is also growing a lot more than Tesla is right now. And if we look at some of the other measures, you know, NIO right now roughly trades at 8 times estimated 2022 sales, and Tesla, I believe, is not too far off of that number either. So you can really take any numbers here that work in your favor for a report like this. Okay, now looking at the market share here, this is another thing they mentioned. So they say that Tesla was delivering quarterly run rate of 15,000 vehicles, similar to NIO today, where Tesla had 45% share of the US EV market, and NIO currently has only a 3% share of the Chinese EV market. But they say new EV market here as well, not just EV market. So that's a distinction right there. They take 3% of the new EV market for NIO, and they take 45% share back when Tesla was similar to NIO now, which is 15,000 vehicles. They took Tesla's share of the US EV market as a whole. That's the first thing. And then also, JP Morgan actually estimates the market share for NIO to be roughly 30% by 2025. So that's a pretty good number right there. We also got to remember that NIO is still growing and it's a new company. And even though their brand is being established right now and has been established a little bit, they're still much, much newer than Tesla, and they still have a long ways to go to be like Tesla. So obviously, Tesla sold more than double the numbers of vehicles than NIO sold. That just makes sense. They're way bigger of a company. So we got to take that into consideration. NIO is going nowhere though, and it's still going to be massive. Now, finally, looking at some of the other things they said here, share structure. This really doesn't make much sense at all. They just say the investor base is more interested in spinning a casino wheel, and that the short interest is almost at a 2-year low. And I mean, it's all just things trying to scare you away from this company, because I'm sure they've short sold it. And they say anyone who's buying this company is buying 3 letters that move on a screen, blah, blah, blah. It's all random, just things trying to scare you away from buying this stock. So that's pretty much it for the Citron research report. Now I just want to go into this stock chart quickly. All right, so here we are at the one-day stock chart. As we can see throughout the day, NIO's been going up and down from the price that was set on Friday. So they're only right now up 0.63%, which is good, which is kind of what we want to see right now, because JP Morgan and Citigroup both have around a $46 price target on this stock right now. And we don't want to see this go too much above that, because if we see that, then when earnings come out on Tuesday, we might actually see people selling the earnings news. Well, depending on how good it actually is, but that's the likely outcome if we see this stock go too high, right? And I don't think that's what I'm seeing here. You know, people are kind of sticking around this $44, $45 mark for now, and that's perfect before we hit earnings. That makes me think that earnings news, if it's good, will actually be represented in the stock. Whereas if the stock was at, let's say, $55, earnings might not be able to live up to that hype, and we would actually see a lower price after earnings. So they're trading at a good spot now. I would just hold and wait till earnings, but I do see this stock going up after earnings if it stays around the level that it is right now till Wednesday morning, which is when the market opens, and the stock will be affected from the earnings news. All right, guys, so that's going to do it for the video today. I hope you guys liked it. If you did, please like and subscribe. It really does help out the channel. Other than that, I wish you guys a great rest of the day, and I'll see you guys tomorrow.